Traders! Stop overcomplicating things with spaghetti charts and loosen up! Bitcoin is sitting on one of the most important decision zones we've seen in weeks. At first glance, it doesn't look great. Price is pulling back, structure looks messy, and it feels like Bitcoin could pull back even lower from here. But when you zoom out, and then you align that with liquidity, momentum, and what institutions are doing, this starts to look a lot less like weakness and a lot more like preparation. But before we get into the charts though, you need to understand what's happening behind the scenes. Let's go! First, and this is important, here we go, Michael Saylor's strategy, just increased its dollar reserves to $2.2 billion, specifically to cover dividends. That tells you one thing. They're preparing to deploy capital aggressively without being forced to sell. Interesting, right? Now, this should not come as a surprise because he was explaining exactly this a month ago when Bitcoin was testing 80K. Let's take a listen, shall we?
And if you're an equity investor, and if you want amplified exposure, if you want to invest in the future of digital capital and the future of digital credit, and you're enthusiastic about, like, we think we can sell a treasury credit product that's really compelling and very interesting to 1 billion people, right? 1 billion people would love to have a bank account that pays 10%. If you would like to invest in that future as an...
If you can't handle a measly 70% fluctuation in the market, then I suggest you put on your big boy pants. Otherwise, you really have no business investing. That's all I can say. Go buy USDC and leave me alone. Now, zoom out even further. Roughly 50% of all tokenized euros are currently on Ethereum. That tells you where real financial infrastructure is actually being built. Tokenization isn't Ethereum anymore. It's happening, and Ethereum is becoming the settlement layer for it. So when you combine institutions raising capital to buy Bitcoin, Bitcoin being treated as a balance sheet asset, and Ethereum quietly dominating real-world tokenization, this market isn't weakening. It is maturing. Now, let's see how this lines up with the charts. Let's start with the monthly chart because this is the foundation. Bitcoin right now is sitting on top of its monthly support, a level that is held multiple times during this cycle. Now, here's the key detail. There's liquidity sitting just above this support. That means price has room to probe lower, clean up the liquidity, and then move higher. That's not bearish behavior. That's how strong markets reset before continuation. Now, zoom out to the Bitcoin 2-day dollar cost averaging chart, and you'll see prices sitting right on top of a major long-term trend line that has defined Bitcoin cycle. Now, check this out. The RSI, it's supporting price. It's not breaking lower. Historically, when Bitcoin holds this trend line with an RSI that's staying constructive, it favors accumulation, not selling or weakness. This is where long-term buyers step in quietly. Notice the higher low developing on the RSI itself. Tools like the RSI can be confusing for traders because often it's taught to be used as a tool to take actual trades with. But in reality, it's better used to get a sense of strength or weakness in a trend. When it comes to actual trades, it's best to use other types of tools and confirmations. But just understand, just because the RSI may not be useful for me as far as trades, it doesn't mean that the RSI has no value at all. It has some value. It just depends on how you use it within the strategy that you employ. On the weekly chart, Bitcoin has broken this major trend line, as you can see here, and that's what's making a few people a little antsy. You know what I'm saying? But notice what's not happening. Price refuses to collapse. It's sitting right on a weekly support. Lows that fail to follow through often turn into a bear trap, or as I like to refer to as a failed low. Right now, this looks more like a reset into support than a start of a broader trend that is bearish, and that is pretty easy to see. Also note, trend lines. A trend line like this, keep in mind, this is basically a reference point for people, right? You draw this trend line to basically make order of this data, this price information. But the market doesn't actually see the trend line. What the market actually sees is the previous price action because that is where order flow occurred, right? So this is what the market actually sees, and it sees an old resistance, it sees an order block, and that is why it reacts in the general area. So the point is, just because a trend line broke doesn't mean that the trend is actually changing. Structure needs to break. A trend line carries less weight than structure. That's the point that I want to make there. Now let's zoom into the 4-hour time frame. Here we see clear consolidation. Check that out. Price is still maintaining support, and buy-side liquidity is sitting above. Markets don't move randomly. They move toward liquidity. Check out the illustration here. This gives you an idea of what type of price action we could see over the next few days. Again, watch for confirmations. As you can see, the buy-side liquidity that we are referring to, again, is the 90K resistance, and then we have the 95K resistance. These price levels are the magnets that are attracting price at the moment. These are the levels in play, and that is what this illustrates here. Also, keep in mind, the 90K was swiftly rejected, which is the type of price action that you should see at a resistance. The thing is, it hasn't followed through as far as breaking support. And the key to pay attention to, even if this minor support is briefly compromised, you have another major support below. Don't be misled by this type of reactive move. Similar to back here, watch for a confirmation. Otherwise, you can be fooled into taking the wrong side, and you want to avoid that. On the 2-hour, Bitcoin has room to retrace a little bit further. As you can see here, there's a clear bullish order block below. A move into that zone would make sense. That would be the market rebalancing before making its next move. Above us, though, the objectives remain clear. As we've been going over in every video, 90Ks first, and if that is compromised, then we're looking at the 95K resistance next. Now, let's talk Ethereum. On the daily time frame, Ethereum simply is correcting after a trendline break, as you can see right here. This is normal price action behavior. Break, pullback, and then decision. Nothing here suggests trend failure. Also, keep in mind, this double bottom area is what defines this structure. You could round that to the 2750 area. That's a double bottom. As long as that level is maintained, we can argue that this structure is either a consolidation or potential reversal. Yes, you can argue that there's a lower high up here and a lower low is likely, but until we have that lower low, this trend is no longer bearish. Also, keep in mind, we're going into a lower volume period, and this thing follows Bitcoin. So if Bitcoin starts to lose momentum or gets quiet, I would expect the same from Ethereum. On the 4-hour, Ethereum definitely broke out. You could see the trend line break right here. But it failed to have enough momentum to clear this old support new resistance level, which you could see right here in the chart. It's a minor level, and it was rejected. Now, that tells me price may come back into this order block and then build strength and then attempt another continuation pattern. You need to watch for that. That's accumulation, not rejection. And it all begins with the confirmation pattern. Watch for it. So when you put it all together, here's what it looks like. Bitcoin, monthly support being maintained with liquidity nearby. 2-day dollar cost averaging trend line with the RSI support. Weekly, sitting on a support after a trend line break. 4-hour, consolidation with buy-side liquidity above. 2-hour, potential pullback with a bullish order block. Ethereum, daily pullback after a trendline break. 4-hour, likely retrace to an order block to gain strength. And on the macro side, institutions raising capital to buy Bitcoin. Bitcoin being treated as a balance sheet asset. Ethereum leads real-world tokenization. This doesn't look like an asset class in recession. It looks like positioning before continuation, people. If you want to trade these levels yourself, I left my exchange links in the description. BTCC and WEX. Use them only if they help. They support the channel and give you access to the same tools. Also, don't forget to like, subscribe, and say hello. Let me know how you feel. Share your 2 cents. Do it. Do it now. Do it. Strong markets don't reward emotion. They reward patience. Right now, structure is being respected, liquidity is defined, and the bigger players are still positioning. Stay patient, respect the levels.
I'll see you in the next one.